Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden within corporate filings. Today we're diving deep into Teledyne Technologies Incorporated's latest quarterly report, and let me tell you, there are some fascinating numbers and strategic moves to dissect. Before we jump in, if you love getting the real story behind company finances, make sure you are subscribed and join our Discord community. The link is in the description below. Let's get straight to the heart of it, the financial tables. Teledyne's latest report covers the third quarter and the first 9 months of 2025, giving us a great snapshot of how they are performing. First, sales. For the third quarter of 2025, Teledyne brought in $1,539.5 million in net sales. That is a solid increase of 6.7% compared to the same period last year. Looking at the bigger picture, for the first 9 months of 2025, sales hit $4,503.1 million, up 8.0% from the previous year. This growth is really being driven by their acquisitions, especially in the aerospace and defense electronics segment. Now let's talk about operating income, which is basically the profit they make from their day-to-day business. In the third quarter, operating income was $282.8 million, a healthy 4.5% increase. For the 9-month period, operating income reached $820.3 million, up a strong 9.1%. This shows that despite increased costs, they are managing to increase their profits. Looking at their balance sheet, Teledyne's assets have grown. Total assets stood at $15,368.7 million as of the 28th of September, 2025. A big part of this growth is in goodwill, which jumped to $8,651.7 million. Goodwill represents the value of a company's brand name, customer base, and other intangible assets above the value of its physical assets. It often reflects the premium paid in acquisitions. Speaking of goodwill, it is worth noting that their goodwill has significantly increased, largely due to their recent acquisitions like Key-Optik and Micropac. This strategy of buying other companies is a major driver of their growth. However, it also means that their financial health is increasingly tied to how well they can integrate these new businesses and make them profitable. Along with goodwill, acquired intangible assets also saw an increase. These include things like patents, customer relationships, and trademarks. While these add value, they also come with amortization costs, which we see reflected in their income statement. Let's break down their business segments. The digital imaging segment is their largest, bringing in $785.4 million in sales in the third quarter. Operating income here remained fairly stable, showing consistent performance in this core area. The instrumentation segment saw sales of $363.6 million for the quarter, a 3.9% increase. This segment includes marine environmental and test and measurement instruments. Their operating income grew nicely here by 2.6%, showing good efficiency. This segment is where we see a huge jump, with net sales reaching $275.5 million in the third quarter, a massive 37.6% increase. This is heavily influenced by their recent acquisitions like Key-Optik. Operating income also surged by 25.0%. This acquisition-led growth is definitely a game changer for this segment. The engineered systems segment saw a slight dip in net sales to $115.0 million, down 8.1% in the third quarter. However, operating income for this segment actually increased by 51.9% for the 9-month period, showing they are managing costs very effectively even with slightly lower sales. Now, this is where things get interesting when we look beyond the top line numbers. While sales are up, net income attributable to Teledyne for the third quarter of 2025 actually decreased by 15.8% to $220.7 million. This might sound concerning, but the report explains it is largely due to a one-time financial boost in the third quarter of 2024 related to tax authorities. Without that one-off event, the underlying performance looks much stronger. The tax provision is quite a story too. In the third quarter of 2024, they had a big benefit of $62.3 million, making the effective tax rate negative. For the third quarter of 2025, it was a provision of $52.9 million, leading to a 19.3% effective tax rate. The 9-month period shows a similar pattern, with a much lower effective tax rate in 2024 due to those tax benefits. Let's peek at their debt. Total debt net of discounts is $2,533.4 million. They did make some payments on their fixed rate senior notes, which is good to see. Importantly, they still have a significant amount available under their credit facility, which provides them with flexibility. A notable item for investors is their stock repurchase program. In July 2025, they approved a new program to repurchase up to $2.0 billion of their own stock. This shows management's confidence in the company's future and is a way to return value to shareholders. Teledyne is also actively managing its market risks, particularly foreign currency exchange rates. They use financial instruments like forward contracts and cross-currency swaps to hedge against these fluctuations. This is a smart move to protect their earnings from currency swings, especially with their global operations. The report also touches on some commitments and potential issues. There is a mention of ongoing voluntary disclosures to government agencies regarding export compliance matters. While they've accrued for potential penalties, the report states that an unfavorable outcome could be material. This is a risk factor to keep an eye on, especially given the global nature of their business and the sensitive industries they serve. There is also a mention of a civil investigation by the US Department of Justice. Teledyne states that while they cannot predict the outcome with certainty, they do not believe it will have a material adverse effect on their financial condition. Looking ahead, Teledyne announced an agreement to acquire the Transpondotech business from SAB AB. This acquisition, expected to close in the fourth quarter of 2025, will add maritime products to their digital imaging segment, showing they are continuing their growth strategy. Now, taking a step back and looking at the whole picture, Teledyne is clearly pursuing a strategy of growth through acquisitions, particularly in the aerospace and defense electronics sector. They are managing their finances well, with increasing sales and operating income, even with some integration costs and market headwinds. However, the significant amount of goodwill on their balance sheet means the success of these acquisitions is crucial. The tax benefits in the prior year make the year. Over-year profit comparison look a bit weaker than it might otherwise, but the underlying trends are positive. The management seems confident, especially with the substantial stock repurchase program. The main risks to watch are the ongoing global trade tensions, supply chain issues, and of course, the outcome of those trade compliance investigations. Overall, Teledyne is a company navigating complex markets with a clear growth agenda. They are expanding their reach and technological capabilities. But investors should keep a close eye on the integration of new acquisitions and any potential impacts from legal and compliance matters. What are your thoughts on Teledyne's strategy and financial performance? Do you think their acquisition-fueled growth is sustainable? Let me know your take in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more in-depth dives into corporate filings. And don't forget to join our growing Discord community linked in the description. Thanks for watching, and I'll see you in the next one.